Hey, what's up guys? Sam here. And I'll be doing the free video for Friday, December 2nd, 2022. So I just finished doing the video for the good folks in the gold room. And we looked around the markets and I showed them what I believe to be some significant shifts under the market. And I'm going to share some of them with you. And then at the end, I'll kind of pepper you with a couple of picks in terms of some things that I think look good. So let's see how quickly we can cover the entirety of the market. So a couple of things. One, remember the bull market? I remember. You remember? Look what the bull market looks like. Right? Green is above magenta, both above zero. Right? That's a bull market. From right about here is where the line shifted into red. The red line starts falling, and then both lines are actually below zero here, right? But basically, from about right here was the end of the old bull market. Also, from about right here was the start of a bear market, right? Red line on top of the green line on top of pink. Easy enough. You had this giant rally back to the daily 200 here. And you see how the market stayed in a bear trend? Even that giant move from about 36 to about 43 didn't do anything to the indicator. This time, what do you have? Well, you have the same lows, right? You'd still use this low. You have an undercut of the lows, meaning that they flushed out the market, right? So that actually, what this does is it acts as an accelerant because you basically flush out the market. It's called a bear trap, or you can look up a Wyckoff spring, and it's basically the same thing. But it is a bullish momentum pattern. And now I'm kind of building you up to this. For the first time in over a year, do you see how the green line there has gone above the red and turned the red line into pink? That's a pretty big change, guys. Right? That's a pretty big change. So the level that I had given you guys in the free videos, probably about a month ago now, to the upside that I was looking at was kind of a moonshot target. It was 4180, and we still haven't gotten there yet. But I would keep the target as is. Here's kind of the thing in terms of trading that can be tough when communicating to a large group of large audience that has various different experience levels. It is entirely possible for us to go up to 4180, which is about 100 points higher, and still have a pattern of lower highs and lower lows, right? So how do you break that? Well, it's entirely possible you can go up another 100 points and still have a bearish market. Now, the signals are not implying that that will be the case, but it is entirely possible that in the event that 4180 is the top, again, the signals don't imply that, but let's just run with it. If 4180 was the top, it would still have a bearish structure on the weekly time frame. It doesn't really flip the bear structure until you get above that swing high right there, right around 4,300, right? Because you have to make a higher high to break the pattern of lower highs and lower lows. So be aware of that, right? Be aware of this 4180 level. I think it's going to be critically important. It is your symmetrical swing from these weekly swings. So you just connect the 3 points, bang, bang, boom. 4180 is the target. So in terms of SPX, and if you understand what I'm saying here about SPX, it pretty much applies to the entire stock market. That's the level, that's the target, 4180. If it gets above 4180, I think you very quickly get to about 4300. And then above 4300, in the event that happens, we then have to have a different conversation. So a couple of the big signals here that I'm seeing that we just haven't seen before, right? I just showed you a major one on SPY or SPX where the trend oscillator crossed bullishly, where it has not done so before. It's never given a false signal, so I have to believe the signal as it is. Look at the MACD here on the Dow. Buy signal, sell signal, buy signal, right? So this sell signal happened in like the middle of 2021. And it's been stuck in that modality ever since, right? See how so you have all these rallies that are occurring, mostly that one, this giant one, that are occurring on a negative MACD orientation. This time, do you see the difference? Also, look at your high-low. Do you see how the high-low is now giving you arrows to the upside, whereas before it did not trigger that? These are very bullish things. If you're keen, you'll say, well, Sam, you said that the SPY has to get above its swing high right about there. That's roughly corresponds to 4,300 on SPY. The Dow is already doing it. Doesn't that imply that the SPY will do the same? I would likely agree with you. It does imply that, right? Now, we don't want to say that things are in the bag. Maybe at the last 30 seconds of the video, I'll go over all the things that are still not correct. But for now, hopefully you can see the point there. Last thing I want to share with you here, and I'm going to speak fast because I want to keep this under 10 minutes as much as I can. XLC. So XLC here, let's do the same thing we just did with SPY. This one you'll note is significantly cleaner. So remember bull market. What does a bull market look like? That, my friends, is a picture. You see how beautiful that is? Gorgeous, right? Easy. No confusion, no false signals, no noise. Gorgeous. Where does it end? But Sam, I don't know how to read your indicator. Boom, right there. Pink turns to red, red on top of green. Well, from that line, you've been in a bear market this whole time. What do you see? Well, you have your first little poke of the green line back above the red in well over probably 18 months. So is that enough? It's a start. And it says that it's relatively early. Keep in mind, look how this works. It doesn't liberally cross, right? You get giant chunks of time from this. So this implies that if XLC here is telling us the truth, and it's not just XLC, right? It's SPY. I just showed you SPY. XLC, that contains Google and Netflix and the rest. This is all implying that and the Dow signal that I showed you with the MACD, these three things are working in concert to tell us that potentially stocks could go quite a bit higher from here. Also, the dollar and interest rates are combining to tell us the same thing. So all of that is quite good. So I'm going to show you, actually, you know what, let's cover the downside here. Let's cover the negatives. There's two major negatives that I still see. From a technical point of view, let's not talk fundamentals, let's not talk news. Remember that your news is not new, right? If you're hearing news, where do you think you're hearing it from? Do you think that a hedge fund has not already, do you think that the journalist or whoever it is that's giving you the news, do you think that they go to you first, or do you think they go to their hedge fund that pays them first, and then you get the news? Which one do you think it is? It's more than likely the first one, right? They're probably any news goes through the money machine first before it gets to CNN or wherever you're getting your news from. So the idea of trading on news is absurd, and you will never succeed doing that. So the only thing that we can do is understand that footprints are left in the chart, and it is our job to analyze the footprints as best as possible and discern and decide what the market is trying to tell us, right? So showed you a couple of key signals here. A couple of things that aren't right. I don't have a chart for this one in front of me, but the yield curve is still not correct. The yield curve is showing deep inversion. Many of you have heard of the yield curve. Many of you have heard that it happens before a recession. I don't necessarily view it that way, although it is accurate. The way that I view the yield curve is when you have inversion, you get black swans. And black swans, by their very nature, the very name, black swan, are unforeseen things, right? So we can play the guessing game as to what that'll be, but it's usually pretty hard to guess. The last time that we had inversion was a few months before COVID. Now, I certainly would not have guessed that COVID would have happened. Many of you probably wouldn't have either, right? You still have inversion in the yield curve, and it's getting worse. So historically speaking, there is no better signal for the market that the market is going to have a rough time than a deeply inverted yield curve, right? So that's problem number one, and it could probably be problem one, two, three, four, and five because it is that big, and that hasn't changed. Problem number two, on monthly charts, all of this bounce is happening on negative momentum divergences, right? So let me show you a positive momentum divergence so you can see what I mean. So this is a positive momentum divergence. This is a bullish thing. Price is down between that point and that point. Price goes down, but the indicator goes up. Do you see how the green line's going up? Green line up, price down. This is bullish. On the monthly charts, you have price up, indicator down. That doesn't end pretty, right? So I think it's important, especially for the YouTubes folks, because I don't know you individually and I don't know your experience levels. It's important that you're able to hold two ideas in your head, right? When somebody tells you something, let's say somebody's crazy enough to say that the Armageddon trade is here. You know, imagine somebody being that crazy to say something like that. Then you also have to say, well, how are we going to get there, right? Because it's not just a straight line down. Everybody wants this or this, and that's just not how markets move. So to end the video here, it is entirely possible that you can have both outcomes. That you can go higher in the short term, let's say 3 months, and then much, much, much lower after that. And the yield curve and the negative momentum divergences on the monthly charts on the indexes are the technical and fundamental combination that I have trusted my whole time trading. So I will continue to trust them. So try to hold two ideas in your head. In the short term, the signals are aligned. I showed you a multitude of them. I gave you the deep example of it by showing you the historical relevance of it. You can see it right now on the chart. I don't even have to talk. Look at this. You see it? You see it. I don't even have to talk. Look, I could have made this video 5 seconds. Boom. There's your sign. See the little change right here? Boom. Indicator speaks for me. So there's that directly in front of us. You do not want to ignore this directly in front of us. Also, you don't want to forget that the longer term signals that led to some crazy person on YouTube talking about the Armageddon trade, they should kick that guy off of YouTube. What led to that guy talk about that are still in the background. So try to be able to square those two ideas. So let me give you some picks, because I know the YouTubes love some picks. So the best thing that I'm seeing, and you're going to say it's moved a lot, and you would be correct, but the best thing that I'm seeing is actually Netflix. Now, I don't like Netflix, so I'm actually quite biased against this, but I can't deny the setup. So I'm looking for Netflix here to a 400 by January monthly expiration. Of course, you want to buy the pullback. You want to do it somewhere between the 8 and the 21 EMA on the daily chart. But this chart is really, really lining up. And also keep in mind, I just showed you XLC. And keep in mind who resides in the neighborhood of XLC. It's Google. It's Netflix. This little sign right there is very good for Netflix. So Netflix is my best momentum pick at this moment. My best pick in general for just a great setup. If you just like perfect setups. But no, Sam, I hate perfect setups. STNG, ideal. It's almost ridiculous. You have a squeeze, you have the stacked moving averages, you have a gorgeous trend oscillator, and you even have a mid-level green boy right there. See, there's no sell signals at all. We like that. So STNG is the best looking thing. Netflix is one of the most explosive looking things. And keep this in the back of your mind going forward. Solar will be the trade of the decade, looking back on this decade. So when we look back on the decade here, and we only have, I guess 7 more years left in the decade, solar will be the trade of the decade. The best play in solar, ENPH, I've talked to you about this pick before. It just keeps going. So buy pullbacks here, buy pullbacks in Netflix, buy pullbacks in STNG. And I'll give you one more, a little bit of a cheapo that I picked up today, and it's PAAS, so the biggest silver miner in the world. There's some pretty good setups happening now in silver, primarily led by the lower dollar and lower rates. Kind of a modest trade here. I'm looking for 20 on PAS, but keep this one on your radar, especially if you like lower price stocks. I'm planning on taking it off at $20. If it gets above 20, then it's got a real shot to do something much bigger. But at least for now, 20 would be a very decent target. It's about 20% from here. So nice little target there at the daily 200, which comes in almost right at 20. All right, guys. So that's my time. So Netflix, STNG, PAS as a spec, and solar is going to be the trade of the decade. So keep that all on your radar. And if you have any questions, drop them down below. We'll try our best to come back to them and answer them. Also, if you have any comments, concerns, complaints, grievances, let us know. Or if you don't have any of the above, let us know what you're drinking tonight. Just something to interact with us so that the YouTube algorithm blesses our videos. I'm going to be drinking something called, what's it called? Uncle Nearest, I think it's called. Some really, I like it. I find it to be some pretty good whiskey. So that's what's on my dinner plate tonight. Thanks as always, guys, for stopping by. Make sure you leave us a comment down below. Leave us a like before you go somewhere else on the YouTube. And I will catch you guys next week. Have a great weekend. Cheers. Hey traders, this is Sam with Simpler Trading. I want to thank you for watching today's video. Hopefully you found the information in it helpful. If you did, leave us a like, leave us a comment. It really does help us out with the algorithm. And if you want to see us trade live with our own real money and be part of the community, come and check us out at simplertrading.com.